But we want to talk about jobs. We got the weekly initial claims for unemployment insurance, that on top of what we learned from Challenger Gray and Christmas. 118.8 thousand layoffs were announced in September. That's up 186% year over year. Yes, that is attributable a lot to the pandemic. But what is happening with the pandemic? We've got the latest report on all of this from LinkedIn, and we invite into the program Guy Berger. He is LinkedIn's principal economist to talk about their latest workforce report. Guy, it's good to have you here. And there was something that jumped out to the team here at On the Move that we wanted to start off with you, which was the slowdown in the pace of the recovery and bringing people back to work may have actually hit a COVID ceiling. What does that mean?
Thanks, Adam. That's an excellent question. I think when you look at the first stage of the recovery, whether in our data or in the government data, the first few months we just saw this tremendous growth. I think, to be perfectly honest, was faster than a lot of economists expected. We've seen our data, and to some extent the government data as well, is we saw those big gains through our July data, and then all of a sudden, since in the August data that we had, the September data that we had, hiring hasn't gone anywhere. It's actually down a little bit. And this COVID ceiling is just the fact that a lot of activity that we were used to in the pre-COVID world can't come back yet. We hear that, for example, indoor dining is a restraint. People are still afraid to go to certain places. Travel's not coming back the whole way. That's really holding back whether we can return to 100%. So maybe we can come back to 90%, but not the whole way there until we really get a better handle on this pandemic.
And so, Guy, when you look at your numbers that you guys gathered there at LinkedIn, you showed from August to September a pullback in hiring of about 0.7%. Now, we also got the ADP report this week that showed an increase in new jobs. We'll get the overall jobs report from the government tomorrow. So how do we put all of this data together to get a picture of what's going on in the jobs market right now?
Yeah, sure. So I think the biggest underlying theme is there's a slowdown in the pace of improvement. Hiring has improved enough that the sign on that net jobs number we get, whether from ADP or from the BLS, is positive. But earlier in the summer we were adding millions each month. Now the consensus and forecasts are going to add less than 1 million. That's if that's the pace we're going to be increasing it every month, it's going to take a long time to close the gap with all the jobs we lost back in March and April. So to me, the question is not whether we're slowing, but how much are we slowing? Is this something we're going to be back to normal next year if we're lucky with a vaccine, or is this something that is much like the last downturn, is going to take years and years to bring us back to where we were? I hope it's the former.
Guy, are there any particular areas where there are improvements, where we're not seeing any slowdowns? Are there any sectors of the economy, or is it just kind of all over the place, just bad news?
So no, I don't think it's bad news everywhere. I'll give it one example. Healthcare hiring is actually around back to where it was before, which is actually a great sign, not entirely surprising, given what we experienced in the economy. Also, I know that a lot of people, are talking about how hot housing is right now. Both real estate and construction, our data, are not quite back to normal collectively, but they're doing a lot better than the rest of the economy. So I really do think there are parts of the economy that are doing better. But the fact is that if you look at recreation and travel, it's still doing really poorly. Energy and mining is down by a lot. Even somewhat surprisingly, even though software wasn't hit that hard, hiring in software is a little softer than that in the overall economy, which is surprising given that a lot of software companies can work remotely. Maybe they're facing weak demand. But I think, again, this K-shaped recovery everybody's talking about is apparent in our data as well.
And Guy, you mentioned a couple of the industries there that have been hit the hardest, but according to your report, arts actually down 51.5% year over year. I'm curious, just thinking about the structure of LinkedIn and the kind of people who are actually looking for jobs on LinkedIn, is it because it's not including a lot of those creative opportunities? How do you sort of take that into account when you think about agriculture or arts or perhaps construction, where hiring may happen elsewhere and not through LinkedIn?
That's a great question. I think when we look at our data, there's certainly certain kinds of individuals that are represented more, but we see a lot of liquidity across all industries. So to me, I'm pretty confident that arts is weak, and it's not really surprising when you think about it macro. A lot of art spending is some of the most discretionary spending that people choose. Right now, people are strapped for cash. A lot of them don't have a job. Their unemployment insurance benefits are shorter. They're worried what's going to happen to the economy next, even if they currently have a job. They're spending a lot of essentials. They're worried about paying rent. I think that to some extent what we're seeing with that extreme weakness, also the recreation and travel, is that's the last item people are thinking of spending money on. It's not surprising those industries are doing so poorly.
Guy, we're going to get the official employment situation report tomorrow from Labor Department. What is it that you're going to be looking for within that report to show perhaps a trend as to where we're headed?
Well, I think that still the most underrated item in the report is the number of people that are unemployed due to permanent layoffs. Even as we've seen total unemployment come down, the people that are unemployed due to permanent layoffs have been moving up month after month after month. It's now gone up as much as it did in the first more than a year of the Great Recession. It's at a level comparable to what we had in the 2000 recession. So we have this little mini recession still building up. We know that claims are still really high, way higher than we would have thought would be the case when the economy is recovering. To me, the more that number keeps going up, the longer and harder of a slog it's going to be to get back to normal.
Okay. Guy Berger, it's always good to have you here. LinkedIn's chief economist, out with the LinkedIn workforce report. And of course, we've got the big Labor Department report tomorrow. All the best to you and the team at LinkedIn.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.